Good afternoon, everybody. My name is Keith Warren, Chief Executive of the Foodservice Equipment Association, and we're proud to partner with Retrade, powered by VATIT, in order to give you the information involvement that you need in what's going on at the moment concerning some financial aspects of moving goods, and specifically guidance for members on the effects of Brexit on trade. We know that there are some cumbersome challenges to companies that are selling goods across the borders. That's UK to Europe and also Europe to UK. And several new and existing requirements have become a greater focus of attention. Items such as VAT registration, the economic operator status, the issue of customs, import and VAT charges, all are in the mix, but and all have to be met in order to give compliance. But whilst all that's going on, you need the operational efficiencies, and you also need the customer satisfaction requirements to be met. So within this webinar, which is being recorded, so if you or colleagues want to go back and revisit, you'll be able to do so in future. And also you can ask questions through the Q&A function within the webinar. And this particular webinar is part of a two-part series focused on giving you access to experts on trade and also specifically VAT compliance with those all essential tips on how to overcome those challenges. So looking at those financial and compliance requirements so that you can avoid the pitfalls and give you that continuity of business and trade within the new era. So we're joined by two experts today, Selwyn Stein and also Gabrielle Magnani. And I'm going to hand over now to Selwyn to take us through the next stage of the presentation. Thanks, Selwyn. Over to you.
Great. Thanks so much, Keith. It's a pleasure to speak with everyone today. I think we're quite excited to beginning to work with the Chamber. On the session from a VAT IT perspective today, I've got it's myself, Selwyn Stein. I'm the Managing Director of VAT IT's Enterprise Solutions business, so working with customers in the UK and across the world to solve complex tax challenges for them, and to get to understand the practical realities of the post-Brexit world that we now live in. We've got Gabrielle, who's our specialist in our customs and compliance solution that we're presenting to you today, and hopefully between the two of us, we're going to be able to walk you through some practical aspects of what the FTA, the Free Trade Agreement, means for business, but equally so, just tangible, practical, actionable areas for you to consider. I'm assuming it's the 4th of March that you would have had some form of friction or challenge in your supply chain as a result of Brexit, and we're here to help you understand what those challenges could be, and I guess let you know that there are solutions to a lot of these problems. So in terms of today's agenda, I'm quickly going to run through some high-level highlights of what the Free Trade Agreement means. Some of these things might be new to you, some of them you've probably heard before, but I think good to just reinforce the key concepts. And then really to hand over to Gabrielle, who's been speaking to businesses just like yourselves for the last 3, 4, 5 months, and trying to get to understand on the ground, what are the key things that you need to consider, what are the key things that you need to be aware of, and how to overcome them, I guess. And then lastly, just to summarize and put it all together, explain again what the solution that we can offer to business would look like. So in terms of Brexit's impact on trade, I think for us, the key elements of the free trade agreements are obvious to everyone. There's no longer a single market between the UK and the EU. There's no longer a single customs union. And really what that means is that there's a wall around the EU for the UK that's similarly to an American business trying to trade into Europe, where for the last 20, 30, 40 years, however long you've traded into the continent without these barriers, that's all changing. And I think the key is to understand what are the areas that are likely not to change in the near future, and how to plan for those. So I think the key for the free trade agreement is that it removed many of the duties and tariffs that would ordinarily be levied on business and moving goods across the border. But what it doesn't eliminate are a lot of the administrative challenges that come along with no longer being in the customs union. And those, of course, have a cost attached to them, whether it's a physical cash cost or in time or effort or energy or expertise. So in terms of post-Brexit world, the UK obviously has no longer got unrestricted free trade with the continent. These kind of barriers that I talk about, whether it's paperwork or spending the time and energy to try and understand customs or tax laws for each of these markets, bring a cost with it. You might have to hire staff or consult with external parties. And there are, of course, challenges to cash flow if your goods are stuck at the border or you're unsure how to ship or sell into Europe, which is a stream of revenue for the business. There are compliance risks. Of course, you're now having to negotiate and work with tax authorities and customs authorities in 27 different countries who all speak different languages, and you have to get to understand that. And then working out what are the supply chain blocks that could be holding up your goods. I think just obviously important to note, after the free trade agreement was signed, these are the practical daily challenges that you are likely all facing and are here to talk about today. Now that the UK is, of course, a sovereign trading state, it can conduct its own affairs and is considered a third party to the EU. So, like I said earlier, much like an American business or an Australian business, transacting into the UK or Europe, those are the rules that now need to apply. In terms of the free trade agreement itself, just a couple of highlights and key areas that, of course, have got lots of media coverage and spotlight. There are trade barriers that have been removed in terms of zero tariffs and quotas. I think this was an essential piece, for the free trade agreement to be successful and to be well received by the market. Any additional cost or burden on your businesses is something that makes you less competitive to a business selling food equipment or services in Europe to a customer who's already based there. So that is, of course, a great help. The caveat, of course, to all of that is the rules of origin requirements, which was something that not a lot of people were aware of or didn't necessarily consider, but have to comply with in order to have the benefit of those, zero customs benefits. What that means is there's a requirement, depending on the type of good that you're manufacturing or selling into Europe, to have the majority of that good either procured or manufactured or processed in the UK, as opposed to simply importing the end product to the UK and passing it out to Europe. Those kind of considerations, again, bring additional layers of complexity to your supply chain and to your business. From a fisheries perspective, again, probably one of the most well politicized and well covered areas. From a fishery perspective, there are compromises on both the UK and the EU side, so that there is no hard border, if we want to call it that, for fishermen on either side to continue trading into each other's waters. And then again, one of the more contentious issues around state aid and the level playing field, some of those considerations were taken into account, and there's equivalence on both the EU and the UK side. But I think that the theme for today and what Gabrielle is going to go into in more details is really that the free trade agreement removed duties and some cost, but it does not mean a simple process for a British business to trade with Europe and vice versa. What it also doesn't cover, and probably a little bit less relevant to today's call, of course, are financial services, and that's well documented. And that's really the next boat of contention for the next while, professional services. But then again, the non-trade tariff barriers the non-tariff trade barriers, that exist, and that we're on the call to discuss today. I think, Gabrielle, at this point, I'm going to hand over to you. We're going to put a short poll on the screen. It's just a couple of questions to get some feedback from the audience. I think practical questions that you're all likely to have been asked or been asking yourself, and that'll help just inform the conversation going forward as I hand over.
Hi everyone, it's lovely to be speaking to you today. I'll give you a few more seconds to complete the poll. And hopefully it won't take too long. I'm just thinking it's only a few questions long. Let's see if I can, no, I can't switch to the next screen. I'm not too sure. I've closed it down on my side. I'm not too sure whether it's been closed down completely. No? Okay, perfect. I'll get on with the next part. So it's lovely to speak to you all. I'm Gabrielle. I'm one of the import VAT specialists that work at Retrade. I've been working on this project now for quite a few months, just to understand the complexities and the obligations that now center around some of the clients that we work with, specifically in industries where they may be moving goods or supplying goods to customers in the EU, kind of knowing full well that it was such an easy process for businesses to do pre-Brexit. Now we're post-Brexit, there are additional complications and considerations that people really do need to think about when they are moving goods and when they're selling goods into the EU. So I think we've listed some of these trade compliance considerations, but what we really like to do at Retrade, and what we really think that most companies need to start doing, is really digging into their supply chains to see whether any of these things potentially could affect their business and could be the stumbling block that they're currently facing when shipping goods. So we've kind of highlighted the key main focuses, and that we've, in our experience, had conversations with people around and businesses, and those really do fall into these kind of main key categories. Does the company require a VAT registration as they're shipping into something called new countries now? Why would that be needed? And that's the case of potentially where the actual transaction is taking place. Are there now rules and laws to suggest that if you are supplying goods and making a sale in that country, do you need to be telling that relevant VAT authority about those transactions? And this also boils down to the following question: where is this place of supply, and what does that mean? And that in essence mean, where is the actual transaction taking place? Where do you pass ownership of those goods over? An EORI number, as Keith mentioned, is something called an Economic Operators Registration and Identification Number. And this is essentially a company's passport to allow them to get goods into the EU. It's something that is super essential for a lot of businesses, because it allows them to pass through customs. And a lot of companies that I speak to believe that they do have this EORI number, but actually they have a GB EORI number, which will no longer work in the EU. So what we're tending to find, that there's quite a lot of challenges when getting goods through customs because of this. And I would say that, the majority of people that are shipping goods into the EU, depending on the shipping terms they've agreed with their clients, would require this to pass customs. And this is one of the stumbling blocks that we see, very often, because it's a requirement for import VAT recovery. So it's really essential, because it can actually impact a significant amount on the cash flow. Another process, as I mentioned about the two above, the key kind of challenge that we are seeing within the experience and the companies that we're speaking to are these shipping and customs challenges. And these should definitely be things that people are considering. What are the challenges that they're facing? Are their documents being completed incorrectly? Are their goods being impounded? Is there penalties that they're incurring? And how are the freight companies that they're working with actually operating? What I'm starting to see through my number of conversations is that these companies are operating in their own way, and they each have their own set of rules that they're following, which sit outside the VAT laws. So it's quite difficult trying to navigate your way through not only VAT rules and VAT laws, but also what each individual freight company is doing as well. And this all boils down to the Incoterms that you are choosing with your clients. And we'll go into that in a little bit more detail kind of later on in the slides. But ultimately, what we're trying to do at Retrade is work with our clients to try and understand their supply chain and identify maybe where there's gaps, or maybe where there's challenges that are facing, to come up with a solution that works for them. So I just want to give you a little bit of background into the pre-Brexit and post-Brexit world. I know that they're probably, a lot of you probably already know this, but just to highlight, just in case there are certain parts of it that you don't quite understand, and this hopefully will give you a little bit of answer, a few of the answers to this. So for a pre-Brexit world, as we all know, sale and delivery of goods was something that happened very seamlessly with the EU. When we sold goods to other companies within the EU, it fell under something called inter-community supply. And this is just an easy way of saying, essentially, well, this is a complicated way of saying, essentially, that sale was always zero rated for VAT. And what we would actually take advantage of is this reverse charge mechanism. But ultimately, the buyer would self-account, or should have self-accounted for the VAT on that transaction. So as a seller, we didn't have to collect any VAT because we were transacting with someone within the EU. So it was up to them to let their government know about the transaction. The actual sale of goods at that point as well was efficient, as we all know. It was as simple as kind of delivering a letter in the post box. A little bit more difficult. You had to complete a couple of forms, but nothing to as it is at the moment. It was not considered an import or an export because we were actually dealing within the customs union. It was free circulation of goods, so there was no import VAT and duties that were payable when you were moving goods. It was all very free movement. So kind of fast forward to today and looking at where we are now, this is something that has changed slightly. So there's always two considerations when you are transacting now with the EU. You have to consider the sale of those goods, and then you have to consider the physical movement of those goods. So we are no longer part of the EU, which means that we can no longer benefit from all of the the simplifications that were in place, such as the reverse charge mechanism. In some cases we can, and this is on a country by country basis, but in a large percentage of others we can't, which means now that there is an obligation on clients to consider their VAT compliance. And what I mean by that is VAT compliance is there a need for a registration in that country? And ultimately, VAT compliance means that you're going to prevent yourself from incurring quite heavy penalties, potentially opening yourself up to audits, also resulting in your goods being impounded for several months. So we do also need to consider these VAT challenges and these VAT obligations when we're moving goods across border. And then just to kind of summarize that, that's obviously the sale, which links very nicely, but the two link together because when we physically move goods across the border now, so across the border meaning UK to the EU, there's obviously this customs clearance process that I'm sure a lot of you will have been used to if you're shipping with the rest of the world, but not so much within the EU. And this now entails, the completion of documents, ensuring that these documents are completed correctly, the checks of the actual goods. There's import licenses that are potentially needed, deferment accounts that are needed, URI numbers need to be shown, there potentially needs to be certificates shown, import VAT is payable, duties can be charged. So this process that seemed, very easy and simple at the beginning is now becoming quite complicated for businesses. And it can also result in quite hefty additional costs because of this, import VAT scenario. Someone has to pay it. So I think for us, the key point of what we wanted to do was assist clients by doing a full supply chain analysis and then transforming, working together to transform this to actually suit the requirements of that individual person. Each business has a different set of needs as to what they want to achieve when they're moving goods to the EU. And this not only we have to take into consideration the short-term goals of actually getting the goods across the border, but consider the long-term wider picture to ensure that the solution works for both sets of things. So what we wanted to ensure that we do is make it cost-effective, compliant, and efficient. So I just wanted to pop a little bit of a slide in about Incoterms and DDP shipping, because a lot of people I've spoken to over the past few months, we always go back to this idea of how are you shipping, what shipping term are you using? And this actually, as I'm sure you're all aware, Incoterms determine whose responsibility it is at each point of the shipping process. So this can boil down to who's clearing customs, who's doing the export clearance, whose responsibility is it to do all of these different things along this process, load it to the boat, load it to the van. And that is why we have 11 different Incoterms, I think, for 2020. But ultimately, what I tend to see within the companies that I speak to and the role that I'm within is that there are two key main terms, and that is DDP and DAP. DAP is where it is the seller's obligation to clear customs, pay duties, and potentially pay the import VAT. It's their responsibility to assign a customs agent to carry out that shipment for them. And ultimately, it gets the goods to the client in exactly the same way as it would have done pre-Brexit. So the client is kind of none the wiser of this process that's going on. They obviously are, because, I would imagine they are shipping themselves. But, from a competitive standpoint, in terms of, competition within the local suppliers, ultimately the goods get to the client in the same way they would before. And now we have to consider this other Incoterms, and these two, albeit they've been, around within the EU, it was never so applicable because there was no such thing as customs clearance when we were dealing with the EU before January. DAP means, it's the seller's responsibility up until the point where customs occurs. And at that point, the buyer assumes responsibility for everything. So there's slight more complication and complexity is because there has to be a handover maybe to a different customs agent. They have to, give authority that they're willing to clear customs, which could obviously slow this process down. It means that there's, the administration now falls onto the buyer to pay the import VAT, to pay duties, and to carry out all of that admin intensive, documentation and so on. So what I've seen within, what I've done, and I'm assuming it's very applicable to this kind of industry in this market, is that most companies are desperate to remain competitive with local suppliers. And so we see the majority and the large percentage of people shipping DDP or have shipped DAP for the kind of first few months because they didn't know how to ship DDP, but their suppliers are their buyers are very much pushing them to say, we don't want to do this. This is, an additional job that we don't really want to take responsibility for. So there's obviously, positives and negatives to both shipping. You've got your DDP, which at the end of the day, someone does need to pay for the import VAT. So you either take that on as your cash outflow burden, knowing full well that you can recover the import VAT quite easily, or you pass that on to the customer and they assume responsibility for that. Within the DDP kind of scenario, there could be the requirement for registrations in certain countries, but that is only in certain countries, and not all countries within the EU insist that you have that registration. DAP, on the other hand, you don't actually need those registrations. Having said that, though, you will generally have to push all of these obligations onto the buyer, which means that they'll have to then lay out the money for the import VAT and duties. They'd have to assign their own customs broker. And sometimes it can lead to lead times dropping, goods being held up because of the no one knowing what's going on. There's sometimes can be complexities around that. And ultimately, if the documents aren't consigned correctly for the buyer either, then they might have difficulty claiming that import VAT back. And again, if they get audited and the documents aren't correct, then that means that they could open themselves up to penalties. So what we generally tend to see is these people leaning to DDP because a partner like us assisting along the way can really control the narrative of what's going on to ensure that these documents are consigned correctly in the right person's name to ensure that they get that import VAT back. So I think in terms of actionable items, I've spoken a little bit about the changes and what things you might have to consider now, but things that businesses need to do now if they are shipping DDP is really think about the supply chain, think about whether they need a VAT registration. It can take anywhere between 2 to 8 weeks, so it's something that needs to be done now. They're obviously, they need to ensure that documents are consigned correctly. This needs to be done across the border. And as I said previously, just because you're shipping DAP doesn't mean that this is not going to impact your client if these aren't consigned correctly. And that obviously could lead to a difficult conversation with a client if it's not done correctly and they're landed with a bill of 27% that they can't claim. So I definitely think that is, a key point as well. It's probably also good, as I spoke before about the freight forwarding companies or your logistics partner, who's actually clearing customs for you. If this is happening in either terms, it's really good to understand what their process is and whether you need guidance or assistance. There's obviously the Chamber of Commerce's that you can work with. This is an area that we can also assist with. I also think that I've spoken to a lot of people who, when we mention audits, it just doesn't ring as true with them. But, you know, there is a high risk of audits happening across the board. It's not just the big companies that will get audited. It is obviously the big companies that end up in the newspaper that when they get audited, but that's not to say that, you know, a smaller company won't get audited. And if things aren't in line, it can definitely result in some nasty penalties or some nasty, you know, compliance issues that weren't there or you didn't know were there, but definitely are. So I think for me, the key consideration that I would have been saying to all our clients that we've been speaking with and everyone we've been having conversations with is just ensure you do marry up your compliance with your logistics. So make sure that everything is in line. You know, it's not the logistics company's responsibility to make sure that you are compliant across the EU and you are shipping in the correct format. It's solely your responsibility. And so, you know, reaching out to partners like ourselves, we can really assist you by helping you understand exactly how you're shipping and what challenges and what challenges and complexities that might raise. And hopefully we can come up with a solution that works for you and overcomes this and make sure you can, you know, continuously trade seamlessly with the EU. So our one-stop shop solution does include all of the things that are mentioned on the screen, and all the things that I've considered and spoken about, that VAT registration and compliance, you know, actual shipping and freight if you need that. We can assist you with getting the goods from A to B. And the system that we have created ensures that all of the correct URI numbers and all of the correct details are being used at the right time to really ensure that all of those documents that I've been speaking about, how important they are to ensure that someone can recover that import VAT, they are being completed correctly. That is the key take-home message here. And ultimately, we want to ensure that everyone gets their import VAT back. You know, that's a large expense for companies to pay. And to keep competitive, a lot of companies do have to ship DDP. You will get contracts, you will get clients, you will have to compete with local suppliers. And so I do think it is important that when you're carrying out this process and, you know, with that additional cash outflow, you need to ensure that you can reclaim that money. Just as a few kind of pointers toward the end, these, if any of these words, you've heard of these words over the past kind of few months, you know, if it's been mentioned by your logistics team, logistics partners, or in any passing conversations, these are all areas that Retrade can definitely assist with. These are some of our qualification questions, but if they're applicable to you, then please do get in touch and see whether these are applicable or not. I think that's about it, really. Is there any questions? Oh yeah, I'll just also mention that we are running free consultations. You can, I think there's a link that we'll hopefully share with you following the call, whereby if you did want to have a chat about anything that I've discussed, or if there's any points that you're just, you know, slightly hazy around, you just want some clarification, please do reach out to us and let us know. We'd be more than willing to have a conversation. And that's it from my side. So happy to answer any questions. So I've got one question here saying, when you talk about the EU, does this include the island of Ireland? So the EU does include the Republic of Ireland, so Southern Ireland. Obviously, there is agreements with Northern Ireland and the UK, whereby trading is simplified. I know that in order to trade with the Northern Ireland from the UK, you do require specific URI numbers and to be part of the TSS. And then trading with Northern Ireland to the EU is simplified as well. So if goods are moving directly from Northern Ireland to the EU, then that can also offer, you know, a lot of simplifications. Having said that though, you know, the majority of people that I've spoken to won't then move their goods all the way up to move them out, because it's just going to increase freight costs and logistics costs, and it's just not efficient at all. So yeah, that's that one. I've also got a question here saying, how easy is it to recover import VAT and what needs to happen to recover this? So obviously import VAT can be incurred in a number of different ways across a number of different countries. Each country has their own set of rules as to allow you to incur that VAT in the first place, but also to recover that VAT. Retrade is powered by VAT IT, and we've been around for 20 plus years, recovering VAT for a number of different size clients. And we've built up the skills, we've built up the understanding of what each of these countries want in order for a company to make a reclaim. So by working with a partner like us, recovering an import VAT becomes quite an easy task once we've got everything, sufficiently aligned in terms of working with your business. What needs to happen is we need to have access to certain documents that we can get directly from your freight forwarding company. So ultimately, on your part, the administration is extremely limited.
Yeah, I can just add to that, Gabs, before we move on to the next question. There's two primary ways to recover import VAT. One is through a local VAT registration if you're required to register for VAT in any of these European countries, and you obtain the refund much like you would in your VAT returns here with HMRC. For other countries where you're not required to register for VAT purposes, in most cases you have to make a foreign tax refund application to the respective tax authority. Pre-Brexit, that would have been a lot simpler. There were online methods to do that with portals, set up between the UK and European tax authorities. Fairly simple. But one of the other changes and complexities after Brexit is that these kind of VAT simplifications and processes fall away. So the UK is now considered a third party. It's a mechanism called the 13th EU refund directive. And it's a bit more of a cumbersome process for an individual to make the application and deal with a German tax office or a Spanish tax office, etc. And that's one of the key services that we offer our customers around the globe to not have to have, not to learn about those rules and processes for these countries and really just wait for the refund to come back. So like I say, two primary ways: through a VAT return or this cross-border application directly to a tax authority.
Exactly. The final question that I've got down here is, are Exwepts terms affected by new rules from a supplier's point of view? So Exwepts have actually definitely been affected in the sense of because we've left the EU, there is still a taxable supply going on between a non-EU company and an EU company. Exwepts refers to goods being picked up essentially at the warehouse door. So the buyer picking the goods up and sorting that all out. There still are VAT obligations, whether that is the fact that you're zero rating the actual transaction because it's an export. There's still requirement to evidence the fact that the goods have left within a certain period of time, and each country has its different rules. So Exwepts definitely are affected by the new rules, but it's hard to kind of provide a one answer fits all, because it's very different depending on where the goods are being picked up from and what evidence is required to show that no export has been made or an indirect export has been made.
Gabrielle, Selwyn, perhaps I'd ask a question. We know from our direct involvement with government and principally with BEIS that whilst the pain that many of our members are feeling doesn't reflect this, we're actually in a honeymoon period, because on the UK side, there's very little, if any, implementation of the paperwork requirements, and that's going to change in April. So as a result of that change, and we'll be out of that soft landing period that the government have promised us, what further complications may that bring from a compliance and trading proposition?
From my point of view, I think from when we bring goods into the UK, the associated paperwork that we once had, we took, the government was able to take advantage of bringing goods in and you receiving your direct evidence that you could then, apply in your VAT return. And I feel like this is going to only increase in terms of the amount of paperwork that needs to be done. But what I like to consider and how I like to tell people is, you know, you've got these documents and there's so many different boxes to complete and check, and the wording can sometimes be very complicated. And sometimes you honestly don't know where you stand and you don't know what the question's asking you. Now, when we're submitting a VAT return, everything has to be correct. Otherwise, the government are well within their rights to say, well, no, actually, that's not what you've said on this piece of paper. So I think that there's going to be further complications, obviously, with the amount of paperwork that's being done. But I think this can give rise to the fact that companies aren't going to be able to take advantage of how easy it once was to recover this import VAT. And that's going to throw a lot of spanners into the works for a lot of companies. So they're going to have to ensure that, you know, everything is compliant and everything is moving in the way it should be, and all of this administration is taken care of.
Yeah, and I think to your point, Keith, it's going to be about resource. It's going to be about finding the time and capacity to complete all these documents. I think all of the kind of complications we've seen going out of the UK and into the EU, we're going to see on the flip side. It's interesting you bring it up. I was speaking with one of the editors from the Financial Times earlier today, and you know, they've heard that these mechanisms and soft landings are going to be rolled down a little bit further into the year because there's a lack of preparation. So I think it's been hard enough getting goods out. It's going to be twice as hard getting goods in because of the volumes of the inflows.
Yeah.
Okay. No, thank you for that. And just while we're on, do you want to explain a little perhaps about how you charge for the service, whether it's in relation to volume, company size, just to give a structure? I know you've kindly offered free consultations with members on that basis. So, and I'm sure it will be individual to companies depending on the service they need, but perhaps to give some parameters or criteria around how you operate and how you work with businesses.
Sure. Do you want? I'll take this on. So I think the way that, as you said, you know, that there is definitely variables, and each company is unique in its own right, and they are shipping certain amount of goods. And I think, you know, our sole focus is mainly around DDP, because it's the way that we like to work and assist our clients is by ensuring that everything is done by the book. And the only way we can really do that is by controlling the narrative and ensuring that we're the ones responsible for completing all the paperwork and, you know, clearing customs ultimately. And that starts to fall away from us a little bit when we're considering DAP, because, you know, the responsibility is then passed elsewhere, and we then can't take we can't then, you know, ensure that it is done correctly. And ultimately, that's why we like to kind of favor the DDP option. But in terms of pricing, it's really hard for me to say, being honest. You know, the way that we like to position it is potentially we would take a percentage of the import VAT that we recover on behalf of our clients. Okay. In some instances, they might need a registration, and that maybe might, you know, result in a small upfront cost. But ultimately, what we like to do is generate it from a success fee basis. You know, we'll ensure we get the money back, and you don't have to pay anything, hopefully, except, you know, a few registration costs, unless we can do that for you.
Okay, thank you. That explains it. And just a supplementary, if I may, the complexity of what's going on in terms of moving goods through Northern Ireland, the complexities of the border that isn't there, but the challenges that are faced through the paperwork. Are you able to advise companies perhaps on best routes to enter the market? Because we have many members whose products are being produced in Europe, which would previously have come via the UK into Ireland, and so there are trading issues there. Are you able to advise companies perhaps on what the cost differentials are of following different routes to access markets? So almost that consultancy basis of how to move goods for the minimum cost.
Yeah, absolutely. That's definitely a large avenue that we focus a lot of work to, is becoming that, you know, consultative approach, you know, with our clients and helping them identify the right shipping routes that work for them.
Okay.
Yeah, I think, Keith, that's pretty much fundamental to how we work with customers. This is, you know, there's no one size fits all solution for any business. Depending on the volumes, the type of the goods, the sensitivity of your customer in terms of time to delivery, the VAT implications of selecting different routes, the customs requirements from selecting different routes. You know, there's simplifications from a VAT perspective if you go through the Netherlands, for example, but then you've got to think about, you know, if your customer's in Spain, maybe it doesn't make sense to go all the way to Northern Europe and incur the additional freight costs. And all of those different pros and cons will be part of what, you know, Gabrielle and the team present in terms of a kind of, you know, best fit solution to simplify your supply chain.
And would that extend to rules of origin as well? A very complex area, I know, and one that isn't resolved if between UK and Europe. But can you help advise on that to give clarity?
So that's something I think we would look to work with some of our partners, like the London Chamber of Commerce, the Manchester Chamber of Commerce, whatever the relevant area is. I think, I'd be loath to say we're the experts in that, because that's a pure customs section. But what we do is work with partners in the specific areas to give that support and advice as part of the same overview and solution.
Okay, no, that's perfect. Good.
I think we've got a couple more questions just quickly. One, how are goods treated when we are returning them to a supplier in the EU? These goods belong to the supplier and there is no sale involved. So repairs are slightly difficult. As you said, there's no sale involved, and it can fall into two categories, really, what we generally tend to see. One being, you actually receive the good and repair it, which means that it's the same good that is coming into the UK and then leaving the UK. And that brings with it, it can, I think that there can be different temporary import license that you can use on things like that. Returns in terms of when you actually physically replace the good, that's obviously where it gets a little bit more complicated, because a new kind of a new physical thing is entering the EU, and it's not so much that temporary import. But again, this goes back to the customs process, whereby I would lean on someone who has a little bit more knowledge in this area than I do. But it's definitely an area we can help with, because there is quite a lot of import back that can potentially be applicable in these scenarios. If we are using a PVA system with our freight company, does this VAT automatically show on our VAT return? I'm actually not too familiar with PVA system. I don't know what that means. Postponed VAT accounting. If you're using postponed VAT accounting, I'm not too sure. I don't think that would automatically show on your VAT return. You would have to check that. I think it's the responsibility of the importer to ensure that everything is accounted for. It might automatically come through to, well, C79s wouldn't exist, but to something similar of the same ilk as a C79. But I would definitely ensure that you do check that is happening, because it is solely your responsibility if you're using postponed VAT accounting. Having said that, if and I think that's why we generally tend to see a lot of freight companies not wanting to offer postponed VAT accounting, because they become jointly liable for that VAT, going into the VAT return. So I definitely would suggest you triple check that.
Yeah, and I think just the last thing to add on that is also to say that in order to benefit from the use of the postponed VAT accounting system, you need to make sure that all those declarations are compliant at all times, and all of your VAT accounting and treatments are of course compliant, regardless of whether it's been automatically assigned or not.
Good. Okay. Well, we don't have any other questions. If I may, on behalf of all our colleague members on the call, thank you very much, Selwyn and Gabrielle, for the time and the depth of the presentation. What I would urge is all members who want to take up that opportunity, please get in touch with VAT IT and take them up on that free consultation. We know there are enough challenges in the market at the moment without some of these issues adding to them. So use their systems and services to get that clarity of guidance and advice in terms of product movements and the resulting complications to ensure that you're compliant. So thank you, Selwyn. Thank you, Gabrielle. Thank you from the FEA team, and especially to Jocelyn for setting up this call. And we look forward to seeing you on the next webinar, which will be posted out to you in due course. Thanks, everybody.
Thank you.
Bye.
Thanks. Bye. Bye.
Bye.